The narrative around Bitcoin and crypto is exceedingly positive. Just in, Fidelity says a small Bitcoin allocation makes sense regardless of your thesis on cryptocurrency. It's little wonder that we've seen Bitcoin doing pretty well. However, oil has fallen nearly 10% in 5 days, as there's worries that falling global demand is around the corner. We'll look into these issues and many more. Let's run the numbers. Welcome back, everyone. I'm Ken from the CTKS method. We're seeing a lot of fantastic news about crypto. The Van Eck CEO predicts Bitcoin will reach 400,000, which will be equivalent to 50% of gold's market capitalization. The narrative of Bitcoin being digital gold is certainly taking off. Bitcoin currently has a market capitalization of $1.4 trillion. In the past 24 hours, total crypto market cap has seen 108.28 million in total liquidations. And when we look to the last hour, there's been so many short liquidations across the crypto market. We've also been witnessing increased flows into the spot Bitcoin ETFs. They're doing quite well. Your first strategy to deal with the uncertainty of financial markets, and they're always uncertain. And don't worry about that because you actually profit from uncertainty. If the financial markets were certain, you wouldn't make a return. And I'm certain of that. You actually require uncertainty to make profit. Oh, how unfair. Yet, there's no shortage of people, especially YouTube influencers out there, or influencers in general, that say, oh, it's only going up, it's never coming back down. That is just rubbish, and that leads a lot of people astray. What you need to understand is the true nature of the market that you're dealing with. Some things go up, for sure. Some things come down, absolutely. If you've got the reasonable probability of your price ranges, you're already ahead of 95% of other people. But then you need a strategy to deal with the uncertainty of how price moves along during the month. And that's where structure comes in. Structure is the fastest way to profit. If you like this kind of content, please smash that like button and don't forget to subscribe and ring the bell notification icon so you don't miss a thing. There are many ways to look at price action, but the most important thing is to understand the price is always coming up and down. It's going up and down, and then going up and down, up and down, up and down. This is the nature of price. When people say something like, oh, it's only going up from here, or it's only going down from here, that is a falsehood. That's not how price works. Price is always moving in a wave. Let's just have a look at Bitcoin. And what we're seeing here is we're going to throw on the indicator. Now, this indicator marks up structural levels. When a structural level is marked up, it's called a CTKS level. And the purpose of CTKS levels is to give you the truth of the chart that you're looking at. Let's pop on the structural indicator for Bitcoin, and we can see something very interesting. The first thing that we can see, Bitcoin was coming down into this structural support level around that 66,900 mark, and then it made a play up to $70,060. It didn't quite confirm, but it found a level of internal support, and then it rallied above that particular level, reconfirmed it back, and now we have momentum to the upside. Just be aware that there are a lot of structural levels above Bitcoin's price at the current time. There are many ways to look at price charts. You can look at a naked price chart like this and add all sorts of indicators to it. But actually what you want to do is you want to mark up the entire structural history of the chart that you're looking at. That will give you the most statistically significant view on what you're putting money into. Bitcoin is currently $70,884. The two levels that you want to keep your eye on are the $70,060 mark and the $71,800 mark. These are the two most important lines to keep your eyes on. At the moment, we have a bit of forward progression in terms of momentum, and momentum is critically important. You can see when we look at US oil, over the past 60 days, US oil has been coming down, but it's just done a big undercut. Now, what could this mean for the market, and could we have predicted this before it did that? The CTKS parts from inside the service had a negative case playing out at 74.09. We came in just slightly below that for the month. What about in the month before, in April? How did that play out? We saw that oil was initially going positive. When it leaves a price path and starts to move towards another path, that means there's something broken inside the market. And we actually saw that US oil move from the positive, the neutral, down to the negative. But these price paths are very powerful in that they set a lower and an upper limit on price for a specific month. And that's their main and major purpose. In yesterday's video, we covered off the role of these CTKS paths. They're built on an understanding of structure. What you understand when you understand CTKS structure, if you can't get above a fairly strong level of structural resistance, you're coming to the ones below. But if you can't pass above those, you're going to the ones below that. It actually is very, very simple way to look at the market when you understand it. Let's have a quick look at the new structural levels on US oil that have just been released inside the service. When it comes to US oil, I want to zoom out a little bit. I've turned the indicator on and just noted the areas of structural resistance and structural support. What you can see here is that we lost this area of structural support and we've dipped down in between them. This opens up oil prices from 65.90 to around that 69 mark to be captured by price. Now, of course, the indicator is very specific. It'll give you the exact levels. But the thing to understand here is that we couldn't get through all of this structural once support. Now it's unfortunately turned to resistance. One thing that you will often see is a resistance level, especially this is a strong one, will be pulled back. The price will be pulled back to that level before it starts to resume down. But this is a very, very strong level of structural support. I'll just pop it on so that you can see exactly where it is. It's from 65.94 to 68.70. And this structural resistance level is now from 77.06 to 81.25. We know that oil prices took a nosedive from all of that structural once support now turning into resistance. One thing to be aware of, at that 73.61 mark was a level of structural resistance. There was also a level down here. Now what we're seeing is that we're getting captured by lower levels of structural support at the current time. But the momentum is overall for the month to the negative side for oil, especially if it can't get above at least 73.69. You can just keep your eyes on these structural levels and it will tell you everything that you need to know. You can learn how to draw these structural levels yourself by doing Level 1 and Level 2 standard certification. If you would like to learn the CTKS method, you can do so by a partial scholarship. What you will find is the CTKS method is literally the world's most powerful structural identification system to determine where buy and sell levels are. To mark up the lines, you'll need both Level 1 and Level 2 standard certification. If you would like to express your interest in that partial scholarship for Level 1 and Level 2 standard certification, you can just reach out and directly message me on Twitter. I'll make sure that I provide the links in the description of this video. If you're serious about your education and you would like to be able to draw these price paths yourself, that's available inside that scholarship on Level 1 and Level 2 standard certification. And if you want to learn how all the markets work together, that's inside the masterclass. And you can reach out to our beloved global ambassadors. They can help you out. The links are in the description of this video as well. Yesterday, we looked at so many different price paths, and you can see the price paths for US oil in March pretty much smack bang on. And it was smack bang on all the way through the month. So US oil just obeyed its structural levels. These are how CTKS paths are actually drawn. A lot of people think that the market is headed for a crash. What we need to do is just to have a look at how the major indices are going. And we can see the major indices aren't going too badly. The S&P 500 is doing relatively well. The Nasdaq is also doing well. We saw that Russell 2000 got hit just recently. But so long as the major indices keep on improving in terms of value, we're looking really, really good. This is something that you want to keep your eyes on. And yesterday, inside the service, the structural levels actually containing the CTKS paths were released on the S&P 500 and also the Nasdaq. If you're looking at the Nasdaq, just bear in mind that this level at 16,885 is a really important structural level. The Nasdaq needs to get above that. It hit it and just retraced, but it's found a level of structural support around that 16,810 mark. What we at least need to see is the Nasdaq overcome this 16,908 and move above it. There can be an absolutely huge difference in price structure between charts. And when you look at the S&P 500, it doesn't have the same structural resistance. It has really light structure in terms of resistance, but also in terms of support at the current time. If you go across to ctksmethod.org, you'll find a free resource called the CTKS Timing Cheat Sheet. It's absolutely sensational, and it can get you into alignment with what's happening across the different charts. All of that information was required to explain that the problems that are occurring with US oil are simply that it just couldn't maintain this structural support and it's pushed itself downwards. We'll be keeping a close eye on US oil. But as we can see with the major indices, they're all still continuing up with a little bit of weakness in the Russell 2000, but that's starting to correct. Overall, things are looking fairly good, and Bitcoin is doing really well. No need to panic at this current time. So long as you keep your eye on the structural resistance and structural support levels, no matter what chart that you're looking at, you'll be absolutely fine. One thing is the price is just always naturally moving between structural resistance and structural support levels. When it can't come all the way down, that's very, very positive. That indicates it's seeking to come up. If you like this kind of content, please like and subscribe. And don't forget to hit that bell notification icon so you don't miss a thing. The markets are continuously changing, and keeping up to date is really important. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.